Welcome to the Decent Crypto Podcast. Today is Super Bowl Sunday. Matt, what's the vibe like for the Super Bowl in Thailand right now?
The Super Bowl in Thailand is at 5 a.m., 5:30.
Nice.
And so it's the good people of Thailand are just getting a nice nap in, waiting to wake up, catch the Super Bowl, maybe a nice recap of this week in crypto while they're at it.
Yes. Yes, of course. They're going to watch the Super Bowl and then tune in to the Decent Crypto Recap, catch up on some Bitcoin NFTs, and then enjoy the rest of their day.
Dude, how many crypto ads are we going to see this year?
Zero crypto ads in the Super Bowl. They've been banned. That was actually one of the funnier things. The contagion is spreading so far. Oh, you didn't see this?
They've been banned.
They banned crypto ads in the Super Bowl.
What? Have they ever banned anything before?
I don't know if they banned things in the Super Bowl, but they banned ads related to crypto. Yeah.
Honestly, that's bullish, right? Like,
yeah, this has got to be the greatest bottom signal of all time. Yeah, I thought we were gonna hit 10K at some point this year, but that's clearly not gonna happen. If they're banning Super Bowl crypto ads and we're not tanking, we're good here. This is
it because they're crypto, or is it because the ads were so bad last year? I mean, remember the QR code one? I think it's because that was, I remember that one.
But no, I think they are probably concerned that, FTX bought out so much ad space last year and dude, every ad was like a company that's in some kind of trouble, like BlockFi, Crypto.com, FTX.
Not eToro. Yeah. Wait, Crypto.com's in trouble? Wait, what? Man,
no, actually, Crypto.com. No, Crypto.com might not be in trouble, but FTX, BlockFi, there's quite a few names
even the best outcome, Coinbase, had a really shitty year.
Yeah, that's true. Yeah. Okay. So how did we get here?
So ads are banned. I thought there was like one NFT community like bought an ad.
Oh yeah.
You read about this?
Limit Break. Yeah, Limit Break. Limit Break bought. They spent like $5 million on an ad. They're the ones that run the digital Daigaku collection.
Oh, that's sick.
Yeah. And this is an insane thing, dude. They put out a free NFT, right? The Digi Daigakus, they're free to mint. Now the floor price is like 12 ETH or something, 11 ETH, 12 ETH. Yeah, free to own. Floor price is like 11, 12 ETH. Yeah. But dude, off of that, and I mean, the founder has done a bunch of stuff in the past, like, built companies in the past and stuff like that. These guys raised $200 million. And
what?
Yeah, now they're buying. Yeah, exactly. Now they're buying Super Bowl ad space.
200 million.
Wild,
wow.
Right?
Yeah. So was that like 40 Super Bowl ads?
Yeah, exactly. So I don't know if they can still do theirs, but the rest of them are banned for sure.
Wow. Cool.
Yeah.
Bullish.
Yeah.
You gotta love that.
Bullish for sure. Yeah, that's our market update.
Who got in the Super Bowl today?
Who do I have in the Super Bowl? Oof. I got my man Mahomes. I'm riding with Pat Mahomes and the Chiefs, baby.
Oh man.
Who you got, Matt?
I mean, as a former Broncos fan, you can never root for the Chiefs. I got the Eagles, baby. True. Fly, Eagles, fly.
Oh, fly, Eagles, fly. Why former Broncos fan?
I don't know. I can't name a single fucking player on the team, to be honest, right now.
You just got a new coach, Sean Payton. Maybe one of the highest paid coaches in the league now. Former Super Bowl champion.
Bullish, bearish. Dude, this is by the
No,
rumors
bullish,
telling you. I
bullish.
mean, yeah.
Well, but most bullish thing that's happened in Denver in a while for the
Yeah.
Broncos.
Not for long though, because we are going, or I am going to ETH Denver,
Oh
and
yes,
potentially
yes,
you too.
that's the most bullish thing. Yes, I'm trying to come. Yeah,
They
okay,
scheduled
let's
it
turn
smarter
our
this year.
attention.
um,
Why?
One little aside, then news only.
Yeah,
They scheduled it smarter this year. They shifted it a week later. Last year, the number
Mm.
one tweet about it that I saw was, "You can tell who's going to ETH Denver based on the fact that it overlaps not only Valentine's Day but also the Super Bowl." And it did indeed overlap Valentine's Day and the Super Bowl last year.
That's
So
amazing.
it's a touch later, but if you're around, hit us up. Let's hang out.
Nice. Okay, Matt. It's time to talk
Okay.
about two very important topics this week. We don't have much, but the things that we do have are big. So the big news is that the SEC is going after Kraken, or they have kind of reached a settlement already, but they're going after all staking services in the US. They're asking all staking providers in the US to register with them as issuing securities. And they went after Kraken, saying that they were providing unregistered securities to their clients, and they reached a settlement for $30 million with them yesterday. Gary Gensler put out this whole video about the charge and how you can't do this, and how staking is basically it meets some of the criteria under the Howey test. So it is a security, any kind of staking service. Matt, thoughts?
Look, I mean, the problem is, right, that like securities laws don't allow for crypto, right? It's like, sure, call it a security, right? But like, who's gonna issue the 10Ks for Ethereum, right? Like, no one really can. The decentralization is a spectrum, right? So literally not a single person on the planet could do this for Bitcoin, right? If Bitcoin redeemed the security and the SEC was like, look, you guys are like selling, someone out there is selling Bitcoin to retail. You need to like register under like the, like the correct like designation, I guess, for that. There actually is no way to comply with like securities laws as they stand in the US. And so, and then you have Ethereum, which is like slightly more, you could maybe point to Vitalik and be like, you're de facto going to be the guy that's responsible for signing off on Ethereum's financials, I guess, at the end of the quarter. But you could make an argument, a very strong argument that like, that's not the way it should work. And then you have other blockchains like Avalanche, where you have like a full-on like centralized company that's like driving it, right? Or like Optimism Lab, basically anything that is in the word labs, right? That could maybe kind of be required to conform to those laws. But also like, it's just not like the appropriate legislation in the vast majority of cases. So it's really bearish, right? It's really shitty. It's really shitty to see like Gary Gensler just kind of utilizing power to go after something that like obviously he knows it's going to be like controversial and spark a lot of like outrage in the community, B, a lot of legal pushback. And it's like, why bother, right? Is it just like a power thing or what?
Yeah. That's what I keep thinking, is like, this guy just seems like he's just out to make a name for himself as much as possible. Doesn't really care about what, like, I don't know what kind of, like I don't know. There's a lot of things he can actually go after, like FTX or some, like a lot of the fraud that we've actually seen here. And instead, like ways to protect investors and retail investors specifically. And he's choosing to focus on stuff like staking, which makes no sense. So yeah, definitely unfortunate to see that. I don't know why actually. I like because I think he would get more cred by going after some of these actually fraudulent actors, right? Like a Celsius or a
or a BlockFi
FTX or BlockFi or yeah.
or a fucking
Like
or
I guess I don't know.
even like
Fraudulent is a
like yeah, not
whatever.
fraudulent, but
I don't know
like
if you
extremely
can.
irresponsible, potentially
Yeah,
not,
exactly.
Yeah. I mean, it's hard to say like FTX, right? Because
Yeah, it's a non-US
well,
entity.
I mean, it's complicated, right? Because the SEC is like Securities and Exchange, right? And so in order to like go after things, they kind of have to deem them securities, right? Or
Mm,
exchanges, right? And so, but like obviously there's substantial enough like overlap between something like a BlockFi and an exchange that like you could do something. You don't have to be much pushier than you're already being going after Kraken for offering staking, to just like
mm,
go after something like a BlockFi for offering like unregulated like loan unbacked like effectively advertised as savings accounts to consumers. um so yeah, it's but even short of that, right? Like there are other things that they could be doing to make this a safer place for participants. So like, offering like
mm,
a safe harbor, right? Being like much more
right.
like defined around what they're going to go after and what they're not, so that companies like
Mm-hmm,
Coinbase don't have to like, tread so lightly on what they offer as investable assets, or allowing
mm-hmm,
for things like derivatives trading, right? So that like users can go to something onshore rather than offshore. And then, the onshore entities are like much more easily like regulatable than the
yeah.
offshore stuff, because then you have people like
Mm,
flocking to FTX that are like using like fake KYC info, and uh forever I was like, man, our freaking regulators, man, they're so like backward looking, like they never like allow me to like play with anything innovative, and it's such a shame because in the bull market I would have made so much money, right? And then the bear market starts up, and then it turns out like actually like I'm glad I'm glad I didn't have the opportunity
yeah.
to invest in on FTX, because I would have lost everything, right? Although maybe not everything. We'll get to that in a minute. But yeah,
Yeah.
I don't know. I just think it's like very senseless to go after staking in particular, right? Because people can still use Lido, they can still use Rocket Pool, they can still self stake.
Mm-hmm.
And also this is a period of time like before like you're even allowed to unstake. So like what's the point?
Mm. Yeah, it's a good question. Like, what is Kraken actually going to have to do, right? In this case, because if you like, at this point, you can't unstake. They had to stop their staking services. So, what are retail customers going to have to do now?
I think they'll get their
Is it
ETH out
clear at
once
this
it's
point?
possible.
Yeah, yeah. So, right
I don't
now,
think they're
it's
gonna
just
just
kind of
like
in this
let the
limbo
ETH like
period.
leak, right? I think they're probably still operating the validators and stuff. Look, here's another thing,
Mm-hmm.
right? Like big government should want validators to be operated by centralized, like U.S. regulated, U.S. domiciled companies. You shouldn't want the validators to be
Hmm.
like run either by like self
Yeah.
stakers or like decentralized parties, or like a company based in like a different jurisdiction, or like a Binance, right? Um, ideally you'd really would like to have, like, just from a selfish censorship perspective, you'd like to have Kraken like being the ones that are going to like operate these validators, but it
Yeah.
does
Oh, for sure.
decrease centralization risk a touch, right? But it'll be interesting to see what happens with all of the other staking providers. Like, is the government going to try and go after Lido?
Mm. I mean, can they? Like, what can they do? They can basically say, like, you're not allowed in the US. But even then, it's like, how easy is it for, like, I think Lido is already based in Switzerland, right? Like the Lido Foundation or whatever it is, like it is based in Switzerland. So like, what can they do?
It's an interesting question. Do you think Kraken's still allowed to offer the staking products to people outside the US?
Yeah, they
Or do you
are.
think as a US domiciled
They
entity,
only had to.
they can't?
No, they can still offer it outside the US. They only had to shut down the staking product for US customers. So it's like, yeah, I don't know. It's like, I think it was 30% of their business. So, yeah, I mean, it's a decent chunk, but yeah, it's a decent chunk for sure. But it's not like they're gonna have to shut down their whole business or anything like that. The other thing is that even if it is deemed a security, right? I think that Coinbase, somebody was pointing out that on the institutional side, the investors will be fine because they are able to trade securities. So I don't exactly know how that works, but I think institutional clients may be fine here. I think it's more, this applies to retail customers.
I think,
I'm not totally
the way it
sure
works is like, for institutional players, right, they can invest in things like private equity funds or like VC funds because they meet the like definition of like qualified investor. And that means that like if you're offering a financial product, you can either be like retail facing or not retail facing. And for retail facing, you have to like have all these disclaimers and you have to have like a lot more like it's just much more like there's much more framework around like what you need to publish, what you need to like offer in terms of information, and relative to like, you know, if you're like, for example, if you're like a hedge fund, you can trade in anything you want. You can trade in art, you can trade in rare wines, you can trade in vintage cars. These all sound like rich old white men hobbies, but that's, you know, they're hedge funds. Like you can trade in securities, right? Like there's no issue there because you're like qualified, right? But if you're retail and you're trying to like trade these things as securities, it's much harder. Or you're trying to like invest in like the wine fund, right? Then you either need to like, and this is kind of interesting, right? Because the definition of qualified investor doesn't actually like pertain legally to a minimum amount of money. Like most people assume that it's just like the rich and wealthy like meet that definition and so you're good. More it's like self-attestation actually. So you and I could actually check a box on like Robinhood or whatever if they offered these products to be like, yeah, I'm qualified. And if they were willing to believe you, they would just let you buy whatever. The bigger issue is that as a proxy for like qualification or like, you know, how sophisticated of an investor you are, a lot of times people that are offering these products will have like a minimum investment size. And that's where it gets to be like pretty shitty and like not democratized access at all. Anyway, a little aside there, but yeah, the institutions will be fine. The institutions are coming and they'll be fine, and that's not good.
They will be fine. Yeah. Okay. So basically retail cannot stake through these providers anymore. So, I mean, in one way, it's kind of, you know, leads to more decentralization anyways. Like, I don't know, it's kind of a blunder from the US again. And Gary Gensler is just, yeah, man is off the mark.
He should know better. I think he missed this one. Yeah.
Yeah. Matt, you have anything else on this topic?
No, let's talk about some fun stuff.
Okay. Let's move on to my favorite topic in a long time. Bitcoin NFTs. We finally have NFTs on Bitcoin once again. So I mean, fun fact, NFTs,
week, right?
Oh yeah, this is part of our FOMO of the week, ladies and gentlemen. America's favorite segment, the FOMO of the week, is back. Matt, all right, you go first.
No, I can come on. Sorry, I interrupted. Come on, let's hear about the ordinals. What is a Bitcoin ordinal?
Okay, Bitcoin ordinals. So ordinals are actually created, created by a group. Like it's basically a new type of like Bitcoin, like smart contract kind of using Taproot, which is the upgrade made last year, making things more scalable. So there's this kind of like weird little hack, I guess, that lets you attach an arbitrary amount of data, not arbitrary, but it lets you attach a ton of data alongside a Satoshi, basically when you send it in a transaction. And so you have a bunch of Satoshis and you can attach sets of data along with those Satoshis. And the Satoshi is basically just the smallest unit in a Bitcoin transaction. So a Bitcoin, if you send one Bitcoin, like one BTC, a Satoshi is the smallest amount you can possibly send. So one sat is like 1 out of 10 million of one Bitcoin. So 1/10 millionth.
10 million. Interesting.
Yeah. So it's a tiny amount. Yeah, it's a tiny amount. That's one sat, one Satoshi. And so as you send one Satoshi, you can basically attach some kind of data to it. And so ordinals are basically a way to attach like a new type of way to do that. And so they allow you to create what's called an inscription. And an inscription is basically an NFT on Bitcoin. So you like create a transaction, which is kind of like a mint, and alongside that Satoshi, you inscribe some kind of data. So it doesn't work in the same way as ETH, where there's like a smart contract and you have like a mint that goes through that. You're basically just hard coding almost like a set of data onto the blockchain, but you can finally put like sorts of data on the blockchain. So people have put, all the classic kind of stuff, just like very basic kind of pixel art, a ton of Pepes, some pictures of Satoshi Nakamoto, all the kind of, mostly like pixelated, trashy kind of stuff, and also memes. That's mostly what's on there, but it's notable just because this is the first time there's ever been anything like this on Bitcoin. It's kind of like, not the first time ever. There were initially NFTs, right? There were colored coins. There were the rare Pepes. There have been attempts at different types of NFTs, but it's always either been too expensive or just no real actual use case there, not enough of a crowd there, like whatever the case may be. This is the first time. So this was launched maybe 2 weeks ago, and it took a while to get to 1,000 inscriptions. It took maybe a couple days, and to get to 5,000 took a little longer. And then it's been kind of skyrocketing since. Like there's basically 50,000 inscriptions now. And there's also been kind of a race to get things on chain as quickly as possible. So the first 1,000 are super valuable, and there's bidding wars on these. This all happens OTC and weird Discord channels, but
wait. How does that work? How does the purchase of a what? Okay, so you send one sat. You send a transaction that sends one sat to the burn address or to yourself. To some address you basically control, I guess.
Yeah, you're basically minting to yourself. Yeah, along with some data, and then when you actually like kind of like mint it or like put it up for primary sale, you're essentially auctioning each piece off individually.
Wait, what?
And people are buying them. Yeah, you're basically like auctioning off each piece.
And then what happens after you sell it? Do you send them the SAT?
Yeah, you send them the SAT. And then you like mark it in, like right now people are marking the OTC sales in like Google Sheets from Discord. Just saying like who like keeping track of who owns what.
Interesting. Man, we
Like
need a deep dive. We need a deep dive like badly.
We need a deep dive for sure. Yeah. I'm going to test this out later. I'm going to try and inscribe some things, but the market for this is insane right now. So like one of the first big collections was, like basically Bitcoin punks. They just put the crypto punks on Bitcoin. And yeah, and
one.
yeah, I know, right?
The name.
But one of the punks sold for 11 Bitcoin, 11 and a half Bitcoin, maybe.
What?
Yeah, exactly. It was like 160 ETH or something like that.
Wow,
just insane. Yeah. So yeah, they are going for quite a bit. Some of them are going for quite a bit.
Wait, okay, so how's the Bitcoin world feeling about this?
It's very split. Some people are super excited, like me, and some people are like, this is complete waste of the Bitcoin blockchain. You should not be using the block space for stupid stuff like JPEGs. This is, this should not be like, actually some of these core developers are actually saying like we should censor out these transactions.
Yeah, that was really funny. That there was one guy, I forget who it was, that was encouraging the censorship of these transactions. But it's like dude's just like on record being like, yo, never censor anything, hashtag Bitcoin, like back in like 2015 or 2012. And
that's funny.
Yeah. What does this mean for the block size wars?
That's the first thing I was thinking about. It's like now we're getting into territory that nobody really is aware of, because probably none of our listeners were around then. But back when people used to debate how big, yeah, I mean, yeah, back in the day there was a big debate about how big Bitcoin block should be, how many transactions should be allowed in one block. So I don't know. Like I think that if this thing really picks up, right? If the ordinals really pick up, you could easily see a world where this leads to something like what happened on Ethereum in 2017, where the network just gets so congested right after the creation of the ERC 721 contract. And the first big collection was the CryptoKitties, and they just completely popped off. And they completely clogged the chain. They like made it unusable. They made it super expensive to interact, to do anything. And I don't know. Like then it basically had to. I don't know, Ethereum had to really change for things to pick up again over the next 2 years. Then things did, but I don't know if things actually really eventually did get resolved in terms of scalability and things like that. I think things are still being improved. The point being, there could be something like that also, with Bitcoin.
There's something to be said for in those early days, like ETH was like a lot cheaper
than it is now, or than
than it is now. Yeah. So true. A clog might just be like, wow, I have to pay something to use this thing. Oh my god, right? And like, oh, like the CryptoKitty I was gonna mint just like isn't worth that much. So
Yeah, that's true. But yeah, anyway. I don't know, with Bitcoin, it's like, yeah, this thing could totally just lead to like clogging the chain and making it unusable for other essential transactions like core financial transactions, which a lot of people are worried about. So I don't know if it becomes big enough, though. Yeah, whole point of this is basically just saying like if this becomes big enough and it leads to like clogging the chain, making it unusable, like I don't know, you could see another fork war, where people are like basically saying like move all of this to layer 2s, or I don't know, make the Taproot chain be a separate chain or something like that.
Yeah. Okay, here's an interesting thing to think about. Okay.
Yeah.
So when you pay for a Bitcoin transaction, you pay like a flat fee per transaction, right? Um, and what are you paying for? You're paying for block inclusion, right? You're paying so that the data that you send will be included in a block that has a hash that has the right number of leading zeros, effectively, right? So you're just paying for that thing to be part of this puzzle, right? But on Ethereum, you're actually paying for gas, right? With Bitcoin, you're just paying for like a one-off flat fee transaction inclusion. As long as your transaction like fits within the parameters that the network allows, you're good on Bitcoin. But on Ethereum, you have to pay more gas for more computationally intense stuff. And one of the most expensive operations, effectively the way that it works is like logical operations are relatively cheap, but storing data to the blockchain is actually very expensive. They used to give you a gas refund actually for like deleting contracts. It was self-destruct is what they called it. And this was interesting because it made it possible to store gas, right? You would like create a contract with a lot of data underlying it at a time when gas was really cheap. And then when gas got expensive, you would self-destruct that contract to get the gas back.
Wow. That's cool.
Yeah. And then you would use it as part of like MEV strategies, right? So like all of a sudden your like cost basis on that gas in Ether terms is much lower, which I think is like pretty interesting. Then they got rid of this, and you can actually see that the use of the like self-destruct contract call like basically dropped to zero, because this was effectively the only reason to use it was because it gave you gas back, and you could include it as like part of your like call to like whatever other function. Anyway, storing stuff to the chain is expensive in Ethereum, right? It's like a conscious decision, and like, boy, there's a lot of arbitrary like gas pricing decisions made. Like, so for each opcode, whether that's like store a byte, read a byte, write a byte, like replace a byte, flip a bit, right? Like all of these, like, flip a bit's probably like too low level, but all of these logical operations have associated gas costs, and they kind of appear kind of random. And like they've had to undergo actually like a few like retweaks, I guess, over the years, because like some things were actually genuinely too cheap or too expensive. But even today in like what's kind of a relatively steady state, it looks random, except storing stuff is more expensive than reading stuff, which is generally something that I think we all agree should make sense. It reduces state bloat, right? On Bitcoin, you don't have that. On Bitcoin, the like people that are running this stuff might just be miners. They might be people that like, as long as they have enough network connection, they don't really care how big the block is. They just need to like hash stuff, right?
Right.
And so, they subscribe to a mining pool, and that mining pool might operate like a full node and tell them like which transactions to include because they're valid or whatever. But they don't have to run full nodes themselves. They're just kind of listening for what they need to hash, right? And if you're connected to a mining pool, you subscribe to this like RPC, and it just sends you block data and you hash it, right? Whereas running a full node, right, used to be like, just something you would do as like a hobbyist for the love of it, right? Or if you had like a business that depended on it, like Coinbase or Binance or, like Slush Pool, right? But today, like, it's basically only if you need to run it as a business. And if state bloat becomes a bigger issue, like each of these transactions on Ordinals can cost a tiny bit of money. It's not much. Okay, let's be real. It's not much. And we'll play a game later called Guess Which Number is Bigger, the amount of data you can store in an Ordinal transaction or X amount of things. And I actually have some stats pulled up for this. So get ready. But it actually can add up. And I think this is a really interesting thing where the people that have to pay those costs are not people that benefit from the transaction fees whatsoever. And like, is that true on Ethereum as well? Yeah, for sure. But there's natural like economic like thing, like incentives to not do that, right? To get your transaction, like your ordinal transaction included over someone else's transaction, you just need to like pay enough relative to like the number of bytes in the block. But the bytes that go into like storage or whatever may actually wind up being different. Or sorry, not bytes in the block, but like the number of like transactions that you're taking up, right? Because this data, and we can get into it in the deep dive, but like it goes through like a separate channel from like standard like block data.
Right.
Anyway, okay, let's play this fucking game. You ready?
Yes.
Okay, so Ordinals data can hit, I think it's 390 kilobytes safely. Okay.
Right.
So a byte is 8 bits, right? A bit is a 10. This isn't helping at all, but I'm going to keep going. And you can have 390,000 of them. Let's play this game. All right, which one's bigger? 390 kilobytes or the Bible?
Oh my God.
Yeah, the standard. What's the one everyone uses? Fuck. King James English Bible.
Yeah. Wow. I would say I'll take the 390.
Actually, no. Bible is bigger.
390. How much is the Bible?
I can't tell you exactly, because the next question is, which one is bigger, the Book of Genesis or 390?
Okay, now give me 390.
Yes. So the Book of Genesis is 204 kilobytes. You can store 1.91 copies on one transaction on the Bitcoin blockchain.
Okay. All right.
Okay.
All right, nice.
Pretty good. Okay, 2 for 2 so far. All right, next up.
I think I'm 1 for 2.
Oh yeah, I'm sorry. It doesn't matter. It literally doesn't matter. Okay, 5 seconds of MP3 or the 390.
Wow, I think 5 seconds of MP3 is probably bigger.
It is in fact bigger. MP3 is 128 kilobytes per second, kbps, and that gets you about 3.04 seconds at 390.
Okay, nice. Wow. So
okay, it gets more ridiculous.
All right, let's hear it. Yeah. No, this is pretty good.
Okay, 50,000 heart emojis. Or the 390.
Wow, 50,000 heart emojis. Okay, so the heart emoji is probably, I don't know, like, is that what, like an 8-bit character or what? I have no idea how that works, you know? So
emojis are complicated. I think they're UTF something.
Okay. So I'll say that the emojis are bigger.
50,000 heart emojis is just a tiny bit bigger than 390. It is 48,333 heart emojis would fit onto a Bitcoin transaction, which does beg the question. Listen, fellas, because we know you're 88% fellas out there according to our audience stats, but also ladies, why not? Like, gender norms are dead. If you're not getting your partner an ordinal for Valentine's Day, what are you even fucking doing? Come on.
Yes, with 48,000 hearts, you have to. We should
show them your love is censorship resistant.
Yes, we should mint those. Yes, unfortunately, the blockchain won't sync by Valentine's Day.
I'm sure we can. Nope. Who's gonna check?
Yeah, that is true. Who will even know?
Anybody that actually like took us up on it would immediately get broken up with. Like, it's not gonna matter.
That's completely true. That is completely true. We should actually put that out. we should make the decent intern meme that out. Like, yo, babe, let's go to dinner. No, hold on, I'm syncing the Bitcoin blockchain.
Even worse, like, how'd you know he was cheating? Well, he said he had to sync the Bitcoin blockchain, and I checked the block explorer.
Oh man, that's funny.
All right, last one. 120,000 SHA-256 hashes. You gotta be fast about this one. You can't. Yeah, just instinct.
120,000 hashes is probably more. I have no idea.
It is actually 121,000. Or sorry, it is 12,000. Fuck. I was off by 12,187.5 SHA-256 hashes can fit within a Bitcoin block.
Oh, nice. So it is more.
Witness data alone.
Nice.
Yeah, it's much more by a factor of 10. Because I misread my note.
Nice.
Anyway. Thanks for tuning in, everyone.
Nice. All right. Nice, dude. That was a good round. I went like 4 for 5.
It's pretty good. We should fucking not bad. Yeah. We should put them on TikTok.
Okay, so yeah, we should.
Great TikTok.
So you can fit some good stuff in an ordinal, like good size, you know.
Oh yeah, for sure. Someone put like a copy of Doom, the computer game. Did you see this?
Wow.
I think it's like not playable.
The source code or what?
I think the whole it must be source code. The whole game or like the compiled code, I guess. The whole game is not that big, right? Because computers, it wasn't that long ago that 39 kilobytes was sick as fuck, right? Like, like let's not forget, like a lot of people around today that will be like, yeah, I remember that. It was fucking crazy. But you know. Obviously, like for us, it's never been something that we think about, but it's a lot of data. So yeah, you can get some decent. Now, what it's not good for is video. I want to say it's like 5% of a frame would fit within, or maybe less would fit within an ordinal. But you know, if you're just doing pixels and stuff, you could have some pretty decently sized like art. Yeah.
That's cool.
You know what'll be interesting is someday we should have like a Dolly chain where you can take the like description that you fed into Dolly and it will, you know, it'll always generate the same output given the same input, and then you can, instead of inscribing the pixels themselves, you could just inscribe the letters, the characters of the like description.
That's cool. The thing is, and then you could have some kind of like placeholder marker that basically says like, that links to the output, because even DALL-E spits out a different thing every time you ask for the same input.
But if at some point we're trying to, have like actual AIX blockchain, like you're going to need like versioning, you're going to need like the exact like, parameters, right? You're going to need stuff to run the same way twice. So, anyway, it's a pretty cool FOMO of the week. I really like this. I think I've been hearing more and more like people talking about like, what are we going to do about Bitcoin fees? What about Bitcoin security budget, right? Like there just aren't enough like organic users of the chain to sustain the security in the long term. And I think what we're seeing is like, nah, people don't care. Like put something fun, make something fun happen, and people will pay a lot for it.
That's the thing. Like people will pay if there is value to be had, and right now it's speculative value, but even that is value, and we'll see. I think somebody said that the same wizarding cult guy, the Forgotten Runes guy I was telling you about earlier. He was like, this is like the invention of ERC 721. On Ethereum, we're gonna see some crazy stuff, which I don't know. Yeah,
I love that take on it. I don't know if I agree. Yeah, but I do love that.
Yeah, I don't know if I agree, but it's a hot take. Okay, Matt, let's move on to your FOMO of the week.
My FOMO of the week. I don't even know if I can call it my FOMO because I actually got into this one, which means it's probably over. My FOMO of the week is called Kento.
Kento, baby.
Man, Kento is a fun one. So I actually met one of the people who was one of the core developers on it, maybe 6-7 months ago. Cool dude. But he was like, yeah, man, an EVM compatible layer 1, on Cosmos. Let's go. And I was like, oh man, how many EVM compatible layer 1s do we need? And then I get it, it's on Cosmos, but don't we already have Evmos? So Evmos messed up their airdrop, and basically that's part of why we have Kanto now. And the other two parts of why we have Kanto now are one, they have this interesting thing called contract secured revenue, which allows the contracts to effectively like source a bit of their income, not necessarily from like protocol fees like you do with Uniswap, where like they take a fee every time someone trades, but it comes out of the gas. Which I think is kind of interesting.
Yeah.
And the other thing that they're doing is they have they've like they're opinionated on DeFi, which I find very, very interesting. They said, listen, guys.
What do you mean?
Reject modernity, embrace tradition. The only real DeFi protocols that you actually need are Aave and Uniswap. And so we're just going to bake in out of the box an Aave and a Uniswap. And like those things are going to have like zero fees for like providing liquidity to them. I want to say once more out of the gas fees, right? That's pretty cool, right? Because I agree. I actually do think that the only DeFi protocols that have ever been important genuinely are Aave and Uniswap. And I think everything else is some complicated like attempt at like wizardry that like doesn't really actually work in the long run. And you know, people will say, what about Aave v3? And it's like, yeah, sort of, but like you know, the difference between V2 and V3 in terms of like the actual miracle of allowing you to do something completely different that was impossible before is huge. And so V2 is good enough, I would say. It also works really well for like the like really, really illiquid stuff in a way that like V3 really doesn't. So I think that's really interesting, right? As someone that has been, I've been saying this forever. I'm like, what did DeFi really bring us? It brought us borrow lend and it brought us swaps. And I love to see a chain that like, you know, is on board with that thesis. At the same time, they have some interesting thing called Note, which is like an algorithmic stable. People are going to either love that or hate that. And in fact, people kind of behave that way about the chain in general. So Note is up Kanto is up, I want to say like 400% over the last 30 days.
Yeah, it went from like 10, 15 cents to like 70 cents at some point.
They went on Bankless, or some people went on Bankless to talk about it, and a lot of people are concerned that may have actually been but I still find it pretty interesting, and it's one of these things where like everyone involved, because it's so difficult to interact with, everyone involved is pretty crypto native. Like if you're on Kanto, it's not like your first alt chain, right? Like this is almost definitely no one's first time bridging, right? It's it's just not that easy to get the Kanto itself. It's not hard. Like you go through Synapse and they have to airdrop you the gas, but like we know what to look for, right? Which is like, how am I going to get gas when I get to the destination chain? Which deck should I be using? Where's the liquidity the highest? We go to DeFi Llama. We check the stuff out, right? We text our friends, hey, do any of the bridges drop you gas, right? Like all this stuff makes sense to us. And then from there, it kind of flows. That it's like a little microcosm, right? So like the NFT, you're like, where are the NFTs? What's the punks, right? You know, and then the next thing,
and they already have all this stuff built
where's Olympus DAO, right?
Where's the Ohm?
Where's Cant Ohm? I got rugged on Camp Dome already. Like, you know, I still feel early, but I actually did.
Yeah, they already have
fun to see like the evolution playing out again, you know?
Yeah. They like speed ran basically every single alt L1 playbook, you know, within like 1 month. But it's been around. It's been around
mining, for like algo stable. Right?
Yeah. Wait, they already had an algo stable? Oh, nice.
They do. It's called Note. It's an interesting design. You can never mint Note. You can only borrow it.
Interesting.
I don't know. I like to see people that are not just like immediately 1,000,000% bearish on algo stables. Like I was talking to some people that work at Jump the other day, and we were talking about Terra, and then I remembered that they actually had like quite a bit of like research that they were putting into that ecosystem to try to like see if there were better ways that it could like actually work.
They were massive, massive.
Yeah, I mean, it really made me feel like nostalgic for the days when people thought algo stables could work, and like anything was possible, right? And now everyone's kind of jumping on this like bear market train, like train of like, oh, like, NFTs are valuable, but as, currencies, not as like monkey pictures, right? And, like stable coins, we want our stable coins to actually be stable. Thank you very much. And I just, maybe it's my fault for being like too involved in like the deep, like boomer, like corners of this world. But like, it's kind of fun it's just fun to see people that are like, yeah, fuck it, let's try an algo stable. Right. I really enjoy that.
Nice, dude. Pushing the Ponzi's as always. That's what we do on the Decent Crypto Pod.
Yeah, buy my bags.
All right, Matt, you got anything else for this week?
You want to touch on the Suzu?
Oh
GTX?
Yeah, dude, OPNX. Yeah, GTX. Yeah, for all the fans out there, GTX is now OPNX, the Suzu Kyle Davies 3AC exchange to help you get your bankruptcy claims out of any exchange out there that still has money to give. I guess they're like officially launching. They're launching with the CoinFlex people. They're gonna use the Flex token or the Flex chain or something like that. Yeah. I don't know what else to say. I mean, I can just laugh, Like, I don't know who's gonna work with them, like on the bankruptcy claim side, I guess they know the ins and outs of how the money was lost. Yeah.
This is the last part of the whiteboard session. It's like, all right, and that's when we monetize.
Oh man, that's funny. That is a good pitch for them though, where they're like, look guys, we know exactly how all the money was lost, how like the daisy chain of leverage, we know exactly where it went, where it came from. We can help recover the claims better than anybody else. Yeah, wow. I don't know.
Let's do it, man. I want to trade these things. I want to trade these things on leverage.
Can you imagine OPNX token has a short squeeze and there's Kyle and Sue just going to the moon next bull cycle? Oh my god.
Yeah, you think they'll let you?
Yeah.
You think they'll let you trade with 1000x leverage on OPNX?
Man, what a god. Yeah, I have no idea. I have no other take on this. Yeah. Cool. Okay,
right.
now I think we can close it.
Yeah.
All right, cool. This has been the Decent Crypto Podcast, everybody. Enjoy the Super Bowl today. We'll be back in a few days with our deep dive on Ordinals or Canto or both. Till then, stay decent.
None of this was financial advice, legal advice, investment advice, or any other kind of advice. If you're looking for advice, you are definitely in the wrong place. Until next time, stay decent.